All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today is June 30th, 2025. Where did the month of June go? I don't know, but it's good to be back in the studio after my family vacation last week. And the top story this morning is big tech is doing all right here. We've got companies like Google, companies like Meta. They're up pre-market today because the Canadian government has rescinded their digital services tax. This has been a kind of interesting scenario we've watched play out over the last couple of days. Last year, under Justin Trudeau, everybody's favorite Canadian politician, I use no sarcasm, we'll say, they passed this digital services tax that said any company providing digital services with revenue up to so many revenue above $20 million, whatever the threshold was, has to pay 3% of revenue to the Canadian government. And it was retroactive to 2022. It was kind of laughable, a retroactive tax. Basically, the only companies that met this threshold were U.S. big tech companies. This was Canada following the European Union's move of a big cash grab from U.S. tech companies. Well, on Friday, President Trump, in typical President Trump fashion, made a Truth Social post lambasting this tax, all kinds of all caps. We'll go over that post and what he actually said in it. Basically said all trade negotiations with Canada are off now. We're done. We're going to let Canada know what their tariffs are going to be. And then go figure, this morning, Canada says, you know what? On second thought, we don't really need that digital services tax. This morning was supposed to be the first payment for that new tax. Canada has suspended it, effective immediately, and they're saying they will immediately create legislation to repeal that tax. So we've got I don't know, if we've got the Trump always chickens out, that's your taco trade. What do you call it when Canada chickens out? Is this the caco trade? What do you, instead of hot sauce, you put a little bit of maple syrup on your taco? Is that how that works? I don't know. Either way, big tech companies doing pretty well on this news this morning. It's another boost to Meta, and Google in particular are doing pretty well here. Also going on this morning, President Trump's big, beautiful tax bill, whatever you want to call it, the big, beautiful bill as it's commonly known, that cleared a key procedural hurdle in the Senate last night. Basically, the vote to proceed to final debate passed after several holdouts came over to a yes vote from a no. It allowed a 51-49 vote. So the bill hasn't passed the Senate yet. It still needs a final vote, but they have cleared that procedure to get the final vote. And already that's causing a little bit of movement in solar stocks this morning. This is interesting. There was some changes to the legislation around solar tax credits, which was a big factor in the House version of the bill. Basically, tax credits, in order to qualify for some of these tax credits, wind and solar companies need to finish these projects by 2027. If they're not in service by 2027, you're not getting your federal tax dollars. So that is more restrictive than some of the prior versions of this bill. And also interesting is they put an excise tax, a big one, on solar panels and wind turbines made in China. And some solar stocks are getting clobbered on that news, and some are actually up big on that news. Companies like First Solar doing very well because they manufacture their solar panels in the United States. So it's almost like they managed to sneak a little bit of a tariff into that bill. It's not quite a tariff. They're calling it an excise tax, but it functions the same way. And speaking of China, we got more bad news from the Chinese housing market this morning. Home sales down again last month, 23% year over year versus the month of May in 2024. Now, you may recall in May of 2024, sales were also down high double digits from a year ago. And in 2023, home sales were down high double digits from a year ago. We're now in the fourth year of this constant double-digit decline in Chinese home prices and total home sales. And look, no end in sight here, guys. The China bulls have been trying to call a bottom for well over a year. There's been all this stimulus talk in China. And yeah, there have been some stimmies and certain rates have been cut. And that did help some Chinese stocks. But the Chinese housing market, that fall is completely unarrested and continues full steam ahead. And I don't see any scenario where that stops because China still has a demographic problem. And even this article in Bloomberg this morning that we're going to look at mentions that at the end of the day, the market for new home construction is going to struggle as long as there's fewer and fewer people. And we really don't have any idea just how bad the demographic situation in China is. The government is willing to admit that the population has been in decline for 2 or 3 years now. But if the government is willing to admit it, it's a good bet the actual statistics are much worse than that, especially in some of the rural areas where data collection isn't as good and where economic policies are hitting particularly hard. And of course, we had a bank failed in the United States on Friday. Why? Because banks always fail on Friday. We don't tell people the banks are failing until Friday because they're already going about their weekend, and then they don't panic and run to the bank to take their money out. Well, we had a small bank in Texas, the Santa Ana Bank of Coleman, Texas, failed on Friday. We'll talk a little bit about that story and what caused it. Do we need to worry? Is this Silicon Valley Bank all over again or no? Well, you'll just have to stick around to the end of the show to find that one out. And of course, lo and behold, on the same day that little bank in Texas fails, we get news that America's big banks have all passed their annual Federal Reserve stress test, a shocking verdict in what has almost surely become scripted theater just to reassure everybody that their banks are fine on the same day that another bank failed. We got a lot going on today, guys. Why don't we shrink my big melon of a head and let's see what is happening in the world of finance. And, well, stocks are up. Number go up. Nothing stops this train. We've been talking about this for quite a while here, guys, and today is no exception. The S&P 500 is up by 22 points or 0.36%. Big tech is obviously chipping into that one on news of that Canadian tax going away. We've also got the Dow is higher by 0.52%, 228 points to the upside. We got stocks making records left and right. The NASDAQ is higher by 123 points or 0.55%. Again, big tech leading the charge this morning. Meanwhile, we've got the dollar is down once again, 97.29. We're off by 11 basis points. Now, we're well off the lows. We actually hit a low of 96.98 at one point this morning before bouncing off of that level. The dollar just continues to weaken here, and it's starting to have people concerned overseas. Take a look at what was going on in Taiwan. We got this one in Bloomberg updated just this morning. Taiwan dollar falls rapidly again, reinforcing intervention talk. So this fall in the U.S. dollar, I mean, this should actually say the Taiwan dollar strengthened again, but let's talk a little bit about this. The Taiwan dollar slumped in a sudden move in late trading following a pattern seen on Friday and fueling speculation that the central bank intervened once more to curb strength in the currency. So the title is the Taiwan dollar slumped. But the reason the Taiwan dollar slumped is because the central bank had to come in and rig currency markets because the Taiwan dollar was strengthening so much. So it's a little bit of a misleading title here. Yes, the Taiwan dollar fell rapidly, but only after rising substantially. See how it's kind of a little misleading there. The local dollar slid more than 2% against the greenback to 29.9 and posted its biggest single session drop since 2001, according to data compiled by Bloomberg. The trading pattern, a rapid slump toward the end of the session, resembled a move seen last week that stoked bets the central bank may have sold the local dollar after it jumped to a 3-year high. With its more than 10% advance, the Taiwan dollar is Asia's best performer this year. The surge comes as foreign investors snapped up local shares and exporters ramped up their selling of the greenback amid concerns the U.S. currency would keep falling. Repatriation of funds from the island's asset managers also played a role. And invisible hands, central banks, is sending a strong signal to markets that their threshold for Taiwan dollar strength may be nearing its limits, said Christopher Wong, senior foreign exchange strategist at Overseas Chinese Banking Corp. Near term, some consolidation is likely as markets digest the sharp moves. The rally is posing a big risk to the island's export-reliant economy and putting pressure on its life insurers, which have massive exposure to dollar-denominated assets. Regulators have taken steps to give the cohort more flexibility in using their reserves to cushion the impact. And this is an important thing here, that this move in the currency is putting pressure on the island's life insurers. Keep in mind, a life insurance company in Taiwan, their liabilities are in Taiwanese dollars, but most of their assets are U.S. dollar denominated, U.S. stocks, U.S. bonds. So when the dollar weakens and U.S. asset prices, say they trade flat or they're up a little bit, but the dollar weakens, your assets are going down. The Taiwanese dollar strengthens, your liabilities are going up. Your balance sheet is taking a hit, even if things are just trading sideways. And so the interesting thing about that is that doesn't just affect insurance companies. They're not saying it in this article, but that also affects banks. Taiwanese banks almost certainly have a lot of U.S. dollar denominated assets. And as the dollar weakens, that hurts those assets. And as the Taiwan dollar strengthens, their liabilities go up in value. Now, just taking a look at this chart, this is USD TWD. This is the strength of this is the number of Taiwanese dollars it takes to make one US dollar. And you can see that chart has been going down pretty much since Liberation Day, I would point out. We had a big decline in May. That was the Taiwanese dollar strengthening significantly in May. We talked about that one, about how that was happening rather rapidly. Then we had the Taiwanese central bank intervene. They bid it back up. Now we've been kind of grinding back lower. We've taken out the lows that we saw back in May. And now the Chinese central bank is once again intervening here, kind of suggesting, hey, guys, this is the level. We're not going to tolerate anything below that. We're not going to let that Taiwanese dollar strengthen anymore. But this is one way how the U.S. dollar, this rapid decline in the Dixie that we've seen over the last couple of weeks, could wreak havoc overseas. And if they're worried about insurance companies, the business model is identical to banks. They won't say it because they don't want to trigger a bank run, but the banks are probably in trouble too. Looking over at the bond market today, we've got a mixed bag in the yield curve. The U.S. 30-year Treasury is at 4.825. That's down 2 points this morning. The 10-year yield, meanwhile, is at 4.261. That's actually up a fraction of a point. The 2-year bond, 3.736. That's down by a fraction of a point. And the 1-month yield at 4.155 is up by a point and change. So bonds going a whole bunch of nowhere this morning. Looking over at the commodities board, we got a little bit of a bid going on in gold here. It's been a rough couple of days for gold, but it's sitting here just below $3,300 at $3,280 for spot gold. That's up about $6 or 0.18%. Meanwhile, silver still not seeing any love, $35.95 here. That's down another nickel or 0.14% after a rough couple of days, but silver, I still like the shiny. We're still way up from a few months ago. A little bit of a sell-off was to be expected. Now we've got copper is essentially unchanged on the day. Platinum is up by 0.5%. Platinum also had a really bad day on Friday. We're covering a little bit of that here this morning. Palladium is down 1.7% this morning. And WTI crude still hovering around $65 for August WTI futures. That's down about 45 cents or 0.67% this morning. And Bitcoin is still right around this 107,000 range, sitting here at $107,708, down about $600 from yesterday. We did get a little bit of Bitcoin news. It seems Michael Saylor still engaged in the infinite money glitch here. Strategy stacks another 4,980 Bitcoin as Michael Saylor boldly predicts a ridiculous sum for the price of Bitcoin in 21 years. And who cares? Michael Saylor won't be around to either see that or not see it. But the point is, Strategy buying more Bitcoin here. Bitcoin's treasury company Strategy acquired an additional 4,980 Bitcoin for about $500 million, an average price of $106,801 per Bitcoin between June 23rd and June 29th. That's according to an 8K file with the SEC on Monday. So as recently as yesterday, Strategy was still buying Bitcoin, still doing the infinite money glitch. Bitcoin treasury companies, guys, that we're seeing them kind of pop up left and right here. I think this business model is probably going to fizzle out at some point. And in hindsight, we'll look back and say, yeah, of course, that was never going to work. But for now, people keep bidding up Strategy stock. All right, let's talk about what's going on with this Canada story. On Friday afternoon, while I was still on vacation, we got this one from President Trump on Truth Social. We have just been informed that Canada, a very difficult country to trade with, including the fact that they have charged our farmers as much as 400% tariffs for years on dairy products, has just announced that they are putting a digital services tax on our American technology companies, which is a direct and blatant attack on our country. They are obviously copying the European Union, which has done the same thing and is currently under discussion with us also. Based on this egregious tax, we are hereby terminating all discussions on trade with Canada effective immediately. We will let Canada know the tariff that they will be paying to do business with the United States of America within the next 7-day period. And then, of course, we have the signature sign off. Thank you for your attention to this matter. We're getting a lot of that recently from President Trump. So President Trump heard that, hey, the first payments are due on this digital services tax. Immediately goes to Truth Social, says tariffs on Canada, embargo on, who run Bartertown, all that stuff. And it didn't take long. Canada blinked. Canada drops digital tax that infuriated Trump to restart trade talks. Canada has withdrawn its digital services tax on technology companies such as Meta and Alphabet in a move to restart trade talks with the U.S. Rescinding the DST will allow the negotiations to make vital progress and reinforce our work to create jobs and build prosperity for all Canadians, said Finance Minister Francois-Philippe Champagne in a social media post late Sunday local time. On Friday afternoon, President Trump said he was ending all trade discussions with Canada, one of the largest trading partners, in retaliation for the digital tax. He also threatened to impose a fresh tariff rate within a week. The first payment for Canada's digital tax was supposed to be due on Monday. The tax, which passed into law last year by the previous government of former Prime Minister Justin Trudeau, was meant to charge 3% of the digital services revenue a firm makes from Canadian users above $20 million, or 14.6 million US, in a calendar year. It would have cost large tech companies billions of dollars. A number of countries, including the UK, has such taxes in place. Instead, Canada will suspend the payments that were due Monday and will create legislation to repeal the digital tax entirely, the Finance Department said. So that is a complete 180 from Canada on that digital services tax. And, well, big tech companies are loving it this morning. We've got Meta Platforms up about 1.75% here, trading at $746.63, up more than $13 ahead of the opening bell. And other names like Google also up here, 2.09 or 2.1% higher, $182, up $3.74 ahead of the opening bell. So big tech is getting a win here, courtesy of POTUS and his Truth Social tirade on Friday. And we have some more news that treads dangerously close to the world of politics, but it affects finance, so we got to cover it. Trump's big, beautiful bill clears Senate hurdle after high drama. This one just this morning. President Donald Trump's big, beautiful bill cleared a key procedural hurdle in the U.S. Senate late Saturday night, pushing the massive spending package one step closer to the president's desk. The vote on a motion to proceed to final debate on the bill passed with 51 yeas and 49 nays. Every Democrat and 2 Republicans, Senator Tom Tillis and Rand Paul of Kentucky, voted against it. The actual voting took hours, and the measure only passed after 3 Republican holdouts, Senator Mike Lee of Utah, Rick Scott of Florida, and Cynthia Lummis of Wyoming, folded and voted yes. So again, this was just a procedural vote. This just sends it to final debate where everybody makes their stupid speeches and then they vote again. But at the very least, the bill is still moving here. Now, already making moves this morning are solar stocks based on this latest version of the bill. Solar stocks hit in pre-market trade after new Senate version of budget bill. Solar stocks were trading lower in pre-market trade after the latest version of the Senate's big, beautiful bill contained more bad news for the sector. Enphase Energy and Sunrun each lost about 4% in early pre-market trade. The Senate's final version of the big, beautiful bill changes were more than it started in the Senate, said Ben Callow, an analyst at Baird. He said for solar and wind companies to receive tax credits, projects must be placed in service by 2027, which means I guess a lot of those solar company projects were not going to be done by then, which means they never get those tax credits, which means those projects probably aren't going to happen now. But there's also an excise tax, 50% for solar and 30% for wind, on projects using Chinese components. Callow said that's good for domestic producers such as First Solar and Nextracker and GE Vernova, but bad for companies that use components that can only be sourced from China. So we got a little bit of a dichotomy in solar stocks this morning. Take a look at Enphase Energy. That one getting hit over the head here, $39.90, down 98 cents or 2.4% ahead of the opening bell. Enphase getting hit by that Chinese solar excise tax. But then take a look at a company like First Solar. They're actually up 6.5% ahead of the opening bell, trading at $162 here, up almost $10, because First Solar manufactures their solar panels in America. And, well, they're not going to be hurt by those Chinese excise taxes. That's going to hurt their competition, make First Solar more competitive, make more of these companies maybe more willing to use First Solar products on their projects in order to avoid those excise taxes. So this company is doing very well here. I guess when it comes to solar, guys, it is a stock picker's market. Meanwhile, things in China just keep getting worse. China home sale slump persists as calls grow for more stimulus. Cue the comments from the 50-cent army, you adorable little bastards. I love when you guys show up in the comments. Tell me how awesome and wonderful everything is in China thanks to Grand Emperor Pu. I'm sure everything is going great here, but the data does say otherwise. China's home sales extended their slump in June, putting further strain on the economy and underscoring the impetus for fresh support measures. The value of new home sales from the 100 largest property companies stood at 339 billion yuan, or about $47.3 billion. The latest preliminary data from China Real Estate Information Corp on Monday showed that represents a 23% fall from a year ago, according to Bloomberg calculations. June sales follows an 8.6% decline in May. On a monthly basis, however, the latest sales were up 14.7% from May, CRIC said. That increase from May is noise in the chart. That's seasonality that happens every year. It's really the year-over-year numbers you need to pay attention to. And, well, that says things continuing to get worse. China's housing downturn has dragged on for years, 4 years now, as the effects of the stimulus blitz last September wear off. Premier Li Qiang this month pledged more action to revive the market, which analysts say is necessary to boost consumption and offset the threat of exports from U.S. tariffs. More support will be needed, but we don't expect a big shift in the approach to housing, said Duncan Wrigley, chief China economist with Pantheon Macroeconomics, who wrote that in a report last week. China is resigned to a slow recovery. Even if China's housing market picks up, the long-term outlook remains grim. Demand for new homes in cities is expected to stay at 75% below its 2017 peak in the coming years, due in part to a shrinking population, Goldman Sachs estimated. And that shrinking population, those demographic collapses going on in China, that is kind of the elephant in the room when it comes to Chinese housing. What good is stimulus? What good is interest rate changes for housing if at the end of the day there are going to be fewer people with needing a place to live? Then you're not going to need to keep building places to live, especially when you already have entire cities that nobody lives in. So the China housing collapse continues. Now, back here in the States, things are not all hunky-dory either. We got this one on Friday, another bank failure. Coleman County State Bank of Coleman, Texas, acquires the insured deposits of Santa Ana National Bank in Santa Ana, Texas. And right away in the title, you can see things not going so well here for these customers because Coleman County State Bank is only acquiring the insured deposits, not mentioning the uninsured deposits. The Santa Ana National Bank of Santa Ana, Texas was closed today by the Office of the Comptroller of the Currency, which appointed the FDIC as receiver. The FDIC entered into a purchase and assumption agreement with Coleman County State Bank of Coleman, Texas, to assume the insured deposits and some of the assets of the failed institution. The Santa Ana National Bank's sole office will reopen on Monday, today, as a branch of Coleman County State Bank. Depositors of the failed bank will automatically become depositors of Coleman County State Bank. The insured deposits assumed by Coleman County State Bank will continue to be insured by the FDIC, so there is no need for customers to change their banking relationship to retain their deposit insurance coverage. Let's see. As of June 18, 2025, the Santa Ana National Bank reported assets of $63.8 million and total deposits of $53.8 million. So the bank should have been all right. They had about $10 million in capital. Approximately $2.8 million of the deposits exceeded FDIC insurance limits, an amount that is likely to change once the FDIC obtains additional information from customers. So it looks like not too big of a hit for the uninsured deposits. Now, here's some of the details here. We don't know exactly what happened at this bank, but it's not looking so good here. Coleman County State Bank agreed to assume the insured deposits for a 5.16% premium. They're buying the stuff at a discount. The FDIC will retain a large portion of the assets of the Santa Ana National Bank for later disposition. The FDIC preliminarily estimates that the failure will cost its deposit insurance fund about $23.7 million. So the hit to the DIF, $23.7 million for a bank that only had $63.8 million in assets. Something big happened at this bank. For that big a percentage of the money to disappear, there has to be some kind of fraud or some kind of theft involved. And the next sentence, they say exactly that. This loss estimate will change over time as the assets are sold. Suspected fraud contributed to the failure of the bank and estimated cost to the DIF. No idea what that fraud is. I haven't really had time since I just got back on vacation to dive deep into what happened at this bank, guys. But somebody stole a whole lot of money. Maybe it was a scam. Maybe it was embezzlement. We just don't know. But interestingly, the uninsured depositors are not getting bailed out here. We have seen kind of random treatment in some of the banks that have failed since 2023. The people at the big banks, the uninsured depositors, they were made whole. The people at some of the little banks, the uninsured depositors, some of them were made whole, but some of the little banks did not have their uninsured depositors made whole. So what the government is doing with this differential treatment, if you're at a big bank, you get all your money back. If you're at a little bank, you don't. You're causing a flight from little banks into big banks, which is going to cause more and more consolidation in the banking sector, which means fewer banks, which means more banks, more bigger, more too bigger to fail. And the whole point was too big to fail was supposed to be too big to exist in the first place. And so this differential treatment from the FDIC is contributing to this consolidation and the loss of small banks all across the country. This story will not help that. And right on cue, big banks pass Fed stress test, setting the stage for payouts. We've seen this one happen a couple of times now. A group of large U.S. banks comfortably cleared the Federal Reserve's annual stress test, setting the stage for lenders to boost buybacks and dividends for shareholders. The 22 banks subjected to this year's test all remained above minimum capital levels in a hypothetical recession. The lenders would withstand more than $550 billion in losses, with the results showing that large banks are well positioned to weather a severe recession, the regulator said in a statement. The annual exam, a product of the 2008 global financial crisis, helps determine how much profit banks can pay out in dividends and stock buybacks rather than keep to withstand potential losses. While big lenders have largely sailed through the test in recent years, the process can occasionally surprise, such as when banks scaled back capital return plans in 2022 after a tough exam. This year, the Fed imposed a hypothetical scenario on lenders with a 10% peak in unemployment, a 50% drop in equity prices, and a 30% decline in commercial real estate prices. Last year's test had similar unemployment but larger drops in asset prices. Look, honestly, I have to say I find this highly suspect. I really doubt these banks would be all hunky-dory if unemployment were to suddenly peak at 10%, 50% drop in equity prices. And it's not really stocks I'm worried about. It's not really commercial real estate I'm worried about. It's their exposure to private credit that I'm worried about. The big banks have made a lot of loans to these private assets, these private companies that can't get money in the bond market. They can't get money anywhere else. So they're loaning money to private equity firms, and then the private equity firms are loaning money to them. We don't really know how much exposure the banks have to this, and I doubt that was really a factor in the stress test. But the bank's doing all right this morning. We've got JP Morgan is up about 1.03% ahead of the opening bell. Bank of America also up just over 1% ahead of the open, and Wells Fargo's up almost 1.4%. Big banks getting bigger while little banks continue to fold. It's a heck of a day at sea, sir. And I just want to say thank you very much to Mr. Armando Reyes. What's going on, Armando, who says run, 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 run. I think, are we referring to bank run there? Look, I'm not advocating you guys go out and run the banks. If you've got a couple $1,000s in a checking account, your money is not at risk anywhere. I'd be more worried about inflation eating away at your savings versus your bank failing and you not getting back the $20,000 or $10,000 you had in your checking account. The only time you really need to be worried is if you have more than $250,000 in any one account category. Understand the nuances of FDIC coverage if you're in that threshold. And if you are in that threshold, you probably want to think twice about going over that $250,000 limit because you're giving up your coverage at that point. Then you probably want to think about spreading things out a little bit. Thank you, Armando, for supporting the channel, sir. And hey, Armando's back again. He says 2 men enter, 1 man leaves. Are we talking about Thunderdome, Armando? Is that what that is? Don't challenge me on a movie quote. Is this bank Thunderdome? 2 banks enter, 1 bank leaves. In this case, it was Coleman County Bank bought the assets for a 5% premium. Sure, why not? A little bit of Mad Max going on in the banking sector this morning. Thanks again, Armando, for the support of the channel. Ed C. has been a Melonhead for 4 months. Thank you, Ed, for supporting the channel. He says many Chinese own houses in both U.S. and China. Any risks? No, I don't think. I've heard this story a lot, and yeah, there is buying assets in the United States is one form of capital flight where wealthy Chinese start buying up land in the U.S. I don't think there's any real risk to, say, U.S. home prices, at least not from this specifically. There's any number of problems facing the U.S. housing market, right? Homes are unaffordable. Unemployment, by the way, we're getting a lot of jobs numbers this week. We got JOLTS tomorrow. We got non-farm payrolls on Thursday this week because of the Friday holiday. I think those are bigger risks to U.S. housing than, say, some sudden flight of Chinese investors dumping their U.S. houses. There may be certain local markets in the Midwest where that might be amplified. You know, all housing is local, they say. So if your area has a particularly high density, then maybe that might be a risk. But nationwide, I don't think that ranks very high on the list of many factors that are threatening U.S. housing prices at the moment. Thank you, Ed C., for supporting the channel, sir. Harmonair LLC says, cup and handle formation on the Bitcoin. Okay, I'll bite on that one. Let's see. What do we actually have a cup and handle formation on the Bitcoin? Let me share my screen again so you guys can see what Harmonair be talking about. Is this what we're talking about? All right. It's a little bit of a stretch, but I guess I could. Is that your cup there? Or is that maybe your handle forming? All right. I could see possibly. To be honest with you, I kind of, when I look at this chart, I'm seeing a little bit of a bull flag here, to be honest with you. I see we had a pretty rapid rise, and now we're getting a period of consolidation. I see more of a bull flag than I see a cup and handle. Either way, they're both technically a little bit of a bullish pattern, but neither one is particularly pronounced here. It is time to start getting careful, guys. We're getting into midsummer now, right? July is about to start here. Some point between now and October. October is like your 18 months since the halving time frame, and typically that's when somebody blows up. You get your FOMO rally. There might be one more leg in this rally, so we might be making new highs one more time before winter sets in. But it is time to start being very careful here. So if you've got profits, think about your exit strategy if you don't plan to hold through Bitcoin winter. Thanks again, Harmonair LLC, for supporting the channel. Zeeble Fritz has been a member for 13 months. Thank you, Z, for supporting the channel. Possible short squeeze happening on Genius Group. I don't know much about Genius Group. It sounds like a humble bunch of guys. Look, any given time, you've got a lot of these meme stocks are going. I don't want to comment on it, Z, because I don't know the stock, and I don't want to be accused of pumping meme stocks for my own benefit and then, doing pump and dumps, which I just don't do. And I don't really know much about this group, so I can't really comment on it. Let me just take a look at what's going on. I will bring up the ticker. How's that? Genius Group, GNS, Genius Group Limited. All right. Yikes. Is this got to be a SPAC, right? I don't know. When I see a chart like this, right away, I see a chart like this, and I see this, I don't know what you call this, a hockey stick laying on the ground curve. I don't know. That's got SPAC written all over it. Without knowing anything about this company, I can tell it was a SPAC already. All right. And then we got this. Okay. Prices have rallied all the way to where they were in 2024, still a fraction. All right. Yeah, that could be a short squeeze going on here. In the grand scheme of things, this looks like a defunct business just looking at the stock chart. I wouldn't get too hung up in that. Maybe it's going to keep running. Maybe it's going to run another 100, 200%. But these short squeezes, guys, when you chase after the squeeze has already started, you also end up selling after the squeeze has already ended, and you end up holding the bags for the squeezers. So be careful. There are message boards where they coordinate this crap, and ultimately you're the last to find out when things change. So just be careful chasing names like that. But again, I don't know anything about the underlying business, so I can't comment. Thank you very much, Zeeble Fritz, for supporting the channel, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. It is so good to be back in the studio with you guys. Appreciate the generosity in the super chats, as well as you, my magnanimous Melonheads on Patreon and YouTube. Thank you guys for supporting the channel. Had a good time talking to you guys last night on our weekly Zoom call. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.